Morning, brother. How you doing, Zach? How's it going, Andrew? Setting up. Well, the best way I could say to do it is, let's see if I could do a quick example. Like, I had this level here, 4381. You can see this large wick. That's not a bearish candle, in my opinion. It might have finished selling, but it was a lot of buyers in this area, and the volume was pretty high compared to the last 30 minutes. So I always try to wait to see the next candle how it opens. As you can see, we held above the level, so this is a good, and you do have to kind of pay attention to the actual formation of the candle in confluence with the volume. Yeah, exactly. Like this might have been red, but that's just because this is a basic volume study. It doesn't show the actual difference between who's the buyers and sellers. Just shows that there was a lot of sellers, and then volume came in, as you can see with this wick, and that should show you with this candle confluence that this volume should show that there's a lot of buyers in this area. So having some education behind candlestick patterns and how candlesticks, what candlesticks mean. So of course you can see this one means no sellers in sight. Buyers started here. So to me, when I see this formation here, I look to see when my next support will be, because I know there is buyers that started at a position and then they wait for some weakness. So here probably showed a lot of weakness with sellers, and that's when buyers stepped in. That kind of help. There's a few books up there. No, I just look at the volume, not the actual number. Actual number does help. It is a visual representation of the actual amount, but there isn't a threshold. If you mean like, do I have a threshold number where I say, okay, this amount of buyers or this much volume is what I consider as a high volume? That's me. I more like Martin said, look at relative volume. So last bit of volume here was pretty low compared to this. And you can see the last two big volume candles had long wicks. So you can see what that shows me is buyers are here. They did just let the price get to an area where they've probably finished their positioning. And that's when they took over fully here. But even then, the buying wasn't that strong. As you can see, we came back pretty much to the same area. So I'm pretty much going to start my prep like I always do. Look on the weekly time frame, give me a good sense of what happened. So we did get a pretty strong selling weekly candle. What's up, Zach? Last red week, probably somewhere around 2022. I'm not sure exactly. For my last red week, it was. I'd have to go double check. I might have a bad few trades, but I'll stay patient for a good trade. It's a longevity game. Yeah, that was a pretty good webinar. I'm just going over my weekly levels. So we did get a break of this supply zone. We are retracing. It's going to be a retracement for me until we break back below 42.83. That's when I'll be looking to see it as a down trend forming. But until then, this is still a pullback. And pretty much basically what I'm looking at for on the weekly time frame. The 42.83 level would be huge to see if we do retrace all the way back there. And potentially could look for that bounce area down there on the larger time frame. We'll see if we can get all the way down there first. Don't anticipate we're getting all the way there, so it's just more of a sense of a level to keep in mind. Maybe, Andrew. If you guys are not familiar with how I draw my zones, you guys can ask me questions. I don't like to go more than, depending if I'm doing SPX with a higher delta, no more than 10, 5 to 10 with SPX. Lower delta, about 10, 15, sometimes 20. Depends on the setup. Max loss, if you have a 15,000 account, should be no more than well, you shouldn't probably put any more than, I would say, 1% in a trade. So say probably 5% max on a trade with a 20% stop. So how I change them throughout the week, Zach, the way I do change them, so like on the daily time frame, they don't mostly change. It's the hourly that changes. So when we get that shift, large enough, say retracement of say a previous hourly zone, and we get it all the way retraced, usually there'll be new levels formed off of that retracement. The daily time frame is going to take quite a bit to change. It takes almost a whole, at least 3 days, I'd say 3 to 4 days before our daily time frame changes, and even then it still would need a significant move. See, I am considering this as a daily time frame change right now, but I'm most likely gonna wait till we get some retracement back to a bounce level before I can switch this into a daily supply zone here. At the moment, I'm just gonna let this ride down to my next daily demand. But once we get into this area and we do start to get that bounce or a pullback or whatever sort of thinking, whatever, as long as we can get that shift, I'll start to move this down. But see, these levels here in this probably going to be our daily supply soon. We can see that shift in the hourly time frame. So I'm not too worried about it right now on the dailies. Right now, I'll still go by it on the hourly. But yeah, I don't change that yet because at the moment we're still upwards. So this hasn't formed the actual trend change. Once we get into here, that'll complete this move right here. That's when I can consider this a daily supply zone. But right now it is obviously an hourly. So right now this is how my daily zones are looking. Probably like a lot of people online. Yeah, Zach, exactly. The hourly changes with depending on the days that we get the movements. The hourly usually always is the one that changes. Yeah, it is crazy. So now moving on to the hourly time frame. Yeah, we could do that definitely. So as you can see, we're in a steady on the hourly. We're on a steady downtrend. So like here for sure, you can do this. Like this is a big supply zone we have that we just created last week. Somebody asked how do I differentiate between my hourly and dailies before. I just shade them differently. So like I was saying, what I like to see on the daily time frame to change my zones. So like you can see here how this retrace. So this was a zone and then it changed again once we did this. So this was another zone and then once we came back down, so this became another zone. And at the moment, I do have this as the most recent supply zone. And then this one as well, as you can see that shift. We have another supply zone here. So it's going to be tricky. Once we get that bounce, we're going to have a lot of sellers with some unfilled orders on our way up if we do bounce up. And then for the demand zones, I'm still using this one right here. It was this one, so we did have like an overlapping zone. Well, they weren't overlapping, but they were stacked above each other. So I was just playing the key levels. Does that kind of show you how my thinking is during the week, Zach? How we get that retracements? And then we got this level here. I'll be paying attention to. Okay, no problem, Zach. That's the best. That's the best way to learn. Larry, is it TOS or Trading View? I'm not sure, but one of them do. If you could probably try Trading View. I know they have some free charting apps. Um, they do. I think one of them does 16 hours. Zach, I create them every night and morning, and unless we get a crazy hourly bar, they won't change after pre-market. Yeah, the heuristics between the broker apps are very annoying. Any suggestions for newcomers? Study, find an edge, find something that works for you. Um, and while you're learning, size down. This one right here. So my normal zone, how I draw my zones is from the top of the wick. So like from this small little retracement area here, I went from top of the zone to here, and this zone seemed to have held the whole way, and we never actually got a retracement to this level. Usually we get a retracement to every broken zone. 4370 will be interesting. But here, as you can see, it's as if I was gonna draw this zone right here. But instead of drawing the zone inside this zone, I just have this key level at the bottom of the zone here. I'm already gonna be paying attention to the top, so I don't need to draw this whole zone out. I could keep this zone how it is. As you can see, we had a lot of bounces in between here. I do expect the same. More times what I've seen in the market is if we break levels a certain way, when we come back to retrace them, we pretty much mirror it. So seeing this price action here, if we do get there on this move down, good chance we could be doing something similar. It's part of the smaller zone, yes, exactly. So I just have that as something I will be paying attention to. So, and then looking at inside, so this is my daily zones. I have my hourly zones. They're shaded darker. The brighter colors are my daily zones. That's how I differentiate it. Yeah, this is definitely an area I would test. Keep going down. We're gonna have some fun. More times I have these levels as price targets. The overall zone will be my entries. Okay, so as part of the smaller zone, the levels that are not your zones, how do you select these? So, as you can see right here, most of the time they are my levels. Um, I just went all the way back here because we haven't been back here since, so I don't have any levels for that right now, but in between right here, so we got 4381 as the bottom, and then 4370. I'm most likely not gonna have a level in between here. Just looking at the previous price action, you can see it was two strong candles. If you did want to trim into strength, like personally, I would probably trim there. Just the retracement of that full breakout candle there. More times I don't even have that level unless there's a big gap between my zones. This one doesn't have a big gap. Looks like we're gonna be stair stepping like we were stair stepping up. As you can see how I said we imitate the same way we go up, we imitate the same way going down. And you can see how it looks very similar. So this break here could imitate that coming in here. SPX? Question mark? I'm not sure, Alex. Oh, any books? SPX. Those are my levels for ES coming into the week. Should be interesting to see. So first thing when we open up, I'll look to see if we're breaking back down. And then this will be the targets for my downside. Targets on the upside. Done pretty much good retracement move. Every time we've broken down a level, we retraced it, rejected it. We're coming in here, so this was a level. We retraced it, rejected it. So if we break down here, I do expect this area to get retraced sometime in the week. If they don't get retraced right away, eventually they do. As you can see here, all these breaks up. We haven't retraced until now. Well, this area we've retraced. It's the lower areas that hasn't retraced since we broke out. So I'll be watching that, and that's for ES. Move on to SPY. Already got some levels in there. Refresh it. If you guys are not familiar with the way I draw, just let me know. I can walk it slowly of how I do it. So we got that nice break above on the weekly time frame. Every time we break a zone, I've always played for a retest to confirm an up move or a break. A true break always gets retested. So that is what's happening right now on the weekly time frame. So 451.96, 414 key level to watch. Still a retracement, pull back until I see that level break for me. Or 31.73. So based on this chart, what was the question, Zach? Does this move look like a retracement, not a trend change down? Definitely a retracement. So as you can see here, what happened? We went right to supply, and as you can see, when we broke out, we never got a retracement here. So we never got a real retest of this breakout of this zone. So once that happens, then we can confirm if it's going to be a downtrend or just retest and go. Exactly. Zach, everything looks weak or strong until it isn't, so definitely want to have that in mind. Right now, my heuristics are just basically letting me know that this is just basic function of a break. And now we went to the next zone and we were retesting. So that's how I've always played it. Uh, I don't go out to seek it, Larry. I do pay attention if it does line up with my game plan. Gives that added confluence. This market's all about confluence. No, I understood, Zach. The candle. Yeah, this is my daily. Pretty much what I'm only gonna look forward to. I'll have this downside target as well. If we do break. As you can see, we broke, came back, retested. So I'm not sure this one would classify as needing a retest. This one definitely needed a retest. There definitely was some orders unfilled here on this insane move up. We've gotten a whole retracement of that week. So like you were asking, Zach, I do want to change this into a daily supply zone. But this supply zone hasn't been broken, and we haven't got a full retracement back up. Once I start to see this curl around here, I will have these levels. But these levels are represented on the hourly time frame, so I do want to keep this daily supply still there. Um, Adding it slowly, Larry. When you're trying to build a system, the simplest way is to add one thing at a time to it. Size down, watch for a bit, see how those uh those basic strategies that you're trying to implement to your those basic confluences you're trying to add to your strategy play out before taking any real action. Journal it. See where you would got in, see where you would have got out. Watch the contracts, how they moved on your setups. So you know which deltas to pick. Options is not just about picking any contract and then just going. You do need to know that part of the game too. You don't want to be too far out of the money for your price targets. You probably won't catch that acceleration on your IV on the contracts. Always have a game plan of where you would trim, where you would exit. Just start journaling all those things. Make it as simple as possible, adding one thing at a time. It's a long game. Appreciate you, ODT. Well, I usually look for where my price targets are, Larry. So where my exit strategies are, usually I would try to stay somewhere in the range near that price target, a little bit deeper, a little bit more in the money than where my price targets of where I would exit. That way, if we do get my price targets, I get that IV acceleration and I'm buying it for cheap. I'm not buying it expensively. So when you buy contracts expensively and you have a game plan for it to go further out, it means that you're not really confident on where price is gonna go. Um, you're more about insurance and protecting against IV crushes and hoping we go there. That's makes no sense to buy expensive contracts to me. If anything, as a options dealer, I would be looking to sell those contracts. There's no point of buying expensive contracts. So again, just like ES, moved around a lot. SPY definitely wasn't as respected as ES. Most of the moves last week was futures driven. A lot of hedging going on. Nonetheless, we did break down. These are my targets for the downside. No problem, Larry. How's it going, Abraham? You guys can see why I'm just drawing lines here. I think SPY will come into play this week. Personal opinion. ES definitely driven the last few days last week. This will be a tricky spot right here, personally. So if you guys know anything about how I explained about overlapping zones, that is a clear overlapping zone. Yes, Larry, I use overall shift with everything. SPX, ES, and SPY tend to correlate very well with each other, but sometimes tech QQQ is based on same holdings. The major holdings in SPY and ES, and the S&P, I mean, and SPX are the major holdings in QQQ. So I'm not gonna think that the smaller companies in QQQ are driving QQQ. I'm obviously gonna be looking at QQQ because of the major holdings are driving it. So they do correlate mostly sometimes with how SPY and ES and SPX also moves. So seeing a big pump in QQQ at say a key level on SPY or ES bounce level, I'm gonna feel much more confident on that bounce level. Seeing QQQ is already has started to move up, and vice versa if we're near a key resistance level on SPY, ES, and SPX, and QQQ is already rejecting a level, I'm gonna feel like a better confluence. It's just about having confluences. Nothing's 100%, It's about having that best opportunity with the best probability for a setup. That's how you want to look at it. That's how you want to gauge all your trades. Don't think that anything is 100%. Could definitely go completely the other way. That's why we have risk management. That's why we have our stops. We know what levels are needed to get us out of that position. And that's about how you want to play this market. Do I think we can bounce here? I think it's possible. We haven't, as you can see here, once we broke out, we have not retraced it. So just like I was saying on ES, most levels get retraced, unfilled orders. So this candle here shows me it was a pretty strong candle. We got on this candle, the low was 431.5. We had a whole dollar move here on SPY, so there should be some orders here, but if we go down, we know where our stop would be, and that's it. That's how we can play it. But this whole area right here, to me, it's going to be a very tricky spot. Here is going to be clear cut for me. But right in this area, it's going to definitely need patience. Just because I do have this overlapping zone. And then we do have this demand here. So it's about like a supply demand zone here. They're both demand right now, but this can quickly turn into a supply, and then here will be the demand part. Higher risk for bounce here compared to here, and then higher risk for rejections here compared to here. I'll definitely be using VIX. I'll be using all my tools for confluences. I used to jagged. If anyone knows my journey in the beginning of Team Bull, I was very predominantly trading month out contracts. Um, at that time, I didn't have a lot of time to day trade full time, so I was doing more longer expiration contracts, and I would do single stocks, Tesla majority, Apple, Nvidia. Most of those ones I was trading a lot, but I would do SPY and QQQ as well, long month out. And the way I would do it is, in the past, say once we got this one candle rejection here, I would look for this retracement to this level here. So I would take a month out contract, and within 2 weeks, if I don't get that destined destination, I would probably trim, make a decision, either trim or I would look to average down into another further out contract. But that's how I used to play it, always on the daily time frame. And I would use the daily zones. That's how I got taught supply and demand in the beginning. We reject the daily, we go test it the next daily. We break out a daily, we go test out the next one. I would take longer out contracts and I would just let them ride. But now, because of SPX and 0 days expiration, and due to Interactive Broker being able to trade SPX 23.5, I no longer have to have any nights where I see the market completely go against me once I get into those long expirations. Or say I'm up a pretty good profits, I would trim now and then have runners for the destined move. So a good rule of thumb, never let more than 2 weeks come into your longer expiration. That's what I've learned. And I did a lot of long-term month out contracts, 2 month out contracts. And I've realized if you're not getting that move that you wanted within 2 weeks of expiration, try to get out of that contract. Roll it, do whatever you need to do, because theta starts to accelerate crazy against you. So if you get a crazy move against you in that last 2 weeks, it takes a lot to get that gains back. It's not worth it, especially if you're up, like you said, 90%. I do tend to size heavier on those longer expiration contracts as well. Um, obviously, I'm not going to put the same amount of capital on a zero DTE as a month out contract. It's a safer investment. It's a safer tool. So definitely you would put on some size so you don't have to get that 100%, 200% move. You can only aim for 25, 30% and still make a pretty good profit. But that's how you want to do it. Don't let within 2 weeks have an exit plan. You want to have all your moves or your price targets for that contract to be met within, say, a month out contracts. I look for 2 weeks personally. I try to get that expected move within 2 weeks because then I get that extra 2 weeks of uh, theta on my side. So it's a good balance to have when once you get your destined price target within 2 weeks of a month out contracts, it's very easy to hold the rest of the 2 weeks to wherever your next targets are. But I definitely trim and then leave my runners. I know, Jagged. That's what I meant about sizing it accordingly so you feel comfortable. If you're in a month out contract, you definitely could put on a little bit more size than your zero DTEs or your 1 week expiration contracts because we know how the market moves away from our contracts a lot of times. So that shorter time expiration, you definitely want to have a quicker exit, less capital than your longer term expiration contracts. So just going through SPY, just like ES on the way back up will be should be very well respected. Like we should get reactions on all of our up moves. Not expecting a retracement this week, probably back up, but we never know. Just have a game plan ready. Again, these levels for me personally, they're my trim areas. So if I do take, say, a rejection at the top of the zone here, I'm looking at price target here, here, here. This whole area is going to be very tricky for downside. We could trend down, but they can burn premium very quickly in this area. Yes, Martin, that is very true. There is still 900 percenters that happen a lot, so but not so much on the longer expirations. Well, no, they've pretty much killed longer expiration 900%. They kill those contracts pretty quickly now. Exactly, 0 DT. He knows the contract too. 43.90 did do a good number. So this 432. It's a nice bounce area. See how that correlates with ES. Yeah, it should be around the same areas here. But you see how my ES daily level is lower than where my SPY's daily level is? And that's what I mean about we could trend further down. Have your confluences. If ES does break here, that just does, it means that SPY can trend further down. Yeah, 430, this area right here, I was just watching it. We got this overlapping zone here I'm going to be paying attention to. If anyone knows how I trade with overlapping zones. My usual opinion how this happens. Go here. Probably bounce here. Probably something will happen here. Go here. It looks like we might break back out, but that level, even though my daily level is at the 431.73, it could give us a quick rejection right there. We could trend down. That's how I see usually happening with overlapping zones. Happens the same way with overlapping. The same way it could easily happen with that. Yes, exactly. 0 DTE. That's going to be the hard part to see this week. So it's got to stay patient. If you're in a smaller account, I'd stay out of it. I'd wait till the dust settles and we get a few points out of there personally. But that daily zone breakouts, how I usually play them, definitely that's where I've seen it get faked out the most. Just because if you take this out, you take this line out, and we get this move here. This move right here usually tends to make people think we're going up. But in actuality, there's still a resistance level here that can hold us down. I would wait. Safer place would be to wait for a confirmation of that level break. Personally, I am gonna wait for that. That's how I've seen overlapping zones always happen. So it happens the same way on the upside move. So here, if we ever get back in here, it'd be like we get in here. Well, before I get into that move first, it'd be we break out of here, get to our daily zone, break back out, retest, come back in, and then we would think we're on the clear of a few the good rejection, but in actuality, they'll hold us right there, and then we'll trend up. So that's how it happens on the upside most times I've seen, and I'm anticipating something like that for the downside. What's your best confirmation or actual break? 15-minute close above. Been noticing 5 minutes aren't as valid anymore for confirmation. They have started to catch on to the 5 minutes. Um, I still use the 5 minutes, but you definitely have to gauge the candle pattern of the breaks with the volume. You can't just go by a close above. So, and like here, you can see this area, the 5 minute was getting disrespected a lot, but you gotta watch other tickers. So, like ES, that smacked perfectly. At the same time, SPY was trying to fake out. This level hit perfectly and we bounced right out. Came back. Now we're here. Even on that 5 minute close here, we did trend up. Came back down. Another 5 minute close here. We got that full trend up. And then you can see we got that full retracement back down. But just because SPY doesn't respect the 5 minute doesn't mean somewhere isn't. Um, that's why I've always paid attention to ES as well. Would you pick a contract on SPY, say if it breaks below or above a zone with the objective to get the contract in the money at the first PT that you would trim or the entry into the next hourly? Exactly what Marty said on SPY zone breaks. I think it's best to go 1 to 2 out of the money because most times your target's gonna be one strikeout. So going one strikeout is definitely a safer bet. Yes, 0 DT, huge. Do not think we're in the clear on SPY, and then you go back and you check your ES zone, which has happened to me in the past so many times where I'm thinking I'm good on SPY, didn't watch ES, and then I go back to do my review and I'd be like, oh man, as soon as ES or SPY broke out of here, we were right at this level I have on ES and we rejected there, or vice versa. So having that confluence 0 DT is huge. Definitely want to make sure you're clear on all fronts. If you do play, say, SPY zone break and ES has a rejection there, then you know where you're going to trim. You can use that as a confluence for a trim. So you can still play the one zone on the one ticker, but have the next zone, next ticker as your trim. Or even start a position against your runners once you trim, playing to see if it breaks back out above that zone on that ticker, and if not, you sell that contract, you keep your runners going, and now you go to your final price target on, say, SPY. Meanwhile, ES, now you've cleared that resistance. Those are different ways to play 0 DT. So that's my levels for SPY. Yeah, I just gotta be very mindful of this area. Not to just jump into calls right away. I most likely will, depending on where we open up, we'll see how this part right here. This is our first line of defense here for calls. And then once if it does get this reaction, of course this is still my supply zone until, or if we break above. Exactly 0 DE. That's how you play the market. Right there. Exactly what you just said. Because if you weren't in calls, you would have tested puts up there. So if you're in calls with runners, why not test it against your runners? You know where your stops are going to be. You know where your risks are going to be. It seems like that's what everyone does anyways, Martin. Everybody hedges their positions in this market. Okay, so the next ticker I'm gonna go through SPX. $43.25.28. So as you can see, this retracement here, I did have this level on SPX. Such a long hourly candle here. Seems like this is what we've been retracing this whole time. In a large demand. So SPX, I'm starting to just do more of just levels. Do like this. So if I wasn't to do any of these levels, the way I would draw my zones, starting with the more recent price action. Broke that Only real level I'm paying attention to is 43.37, 43.25, 43.61. Everything else. Oh, I'd Larry appreciate you for stopping by, brother. So I don't really use SPX most of my time for confluences. I do watch these key levels though. I have marked out because they're much easier to see on SPX. These key levels. In between, I feel like it's ES futures driven. That's why I mostly pay attention to ES and then SPY for intraday because of the market liquidity into the ETF. So those levels get more volume and respect. I feel like SPX is more for option dealers, which is a key important. Exactly. Exactly, Arjun. Um, this more for those option dealers hedging requirements levels. So these are my levels I'll be paying attention to. 54, 43.54, 43.37, and then 43.25. Exactly. Especially the key levels are very important to see and know on SPX. So if you're wondering how I got this 43.54 level, it's as if I was going to draw my demand here. If we go into 5-minute time frame, you can see how these levels here was respected, rejected, came back down. Well, they use future ZAC as well. SPX, of course, it's cash settled, right? So dealers always use SPX to sell options more times instead of having the underlying as your covered. Instead, it's cash covered. You don't need the equity. But ES futures helps them also go long and short on their hedge positions. But you can see why how this zone here was an important level, of course. So coming into, so this was just like how, but this was such a big, large zone. Yeah, I'm definitely going to be paying attention to this candle and this levels here. Just double check something quickly. We never got a 5-minute close below or so this is still demand. I think 0DT, you were asking about the 5 minutes. You can see how 5-minute close worked pretty well here. Waiting for that 5-minute close on this SPX zone here. Definitely saved you from thinking it was a break here and here as well. And then also a 5-minute close here. You got some acceleration. Got a few points. Definitely faked it out until this one. Then we got that full move up. It's coming into the week. Is there a zone resistance inside here? No, I'm just gonna basically pay attention to the top and bottom and then know that this right here, this 43.37 is part of this larger demand zone here. So I'm not gonna just think that we're gonna keep going all the way down to 43.25. I do expect some reaction at 43.37. So you can see here, this supply zone is from the daily. These ones are from the hourly. This one was just made on Friday. Both of these were made on Friday, pretty much. But this zone right here, we're part of a larger demand zone right now. So this is why we're having this crazy price action lately. Some people are buying the dip, starting their positions early. There are buyers present, as you can see in these candles, in this slow grind down. So this is my levels for SPX. So the next ticker I go to is NQ. Check the weekly on these guys. NQ was the only one that got to their next weekly level. Such a crazy W, eh? Wow. Perfect W almost. Insane rally by tech. So, do I think we go back to the weekly demand? It's hard to say, but as you can see, we did not retrace this zone breakout, so I wouldn't be surprised. But do I think there's a lot of games to be played before that? Yes, I do. So these are what I call like the weaker daily zones, just because it was not really causing a full shift of the trend on the daily time frame. Like this one right here, and even here, this one was like another weak daily trend change. But there could be some orders sitting there. It could be places where they do feel like they want to pick up some orders and jump on the ride. So you do want to have that level marked out. But this is where my strong hourly zone would be. Or daily zone, sorry. As you can see, we never retraced this breakout. When I say retrace, that doesn't mean to me that it's gonna be a full trend down move. It just means that we're retracing. No problem, Rebecca. Enjoy the rest of your Sunday. Quickly get this one done with. Hourly zones. Again, we're part of a large daily demand here. Or hourly demand, sorry. So I'm not going to have this zone up. I'll stick to this. Seems like this is where they concentrated the zone. And they created a small supply zone here. If you guys know any know my strategy and how I like to play these zones, confirmation of breaks, I go target the next zone. So as you can see how we have a bunch of overlapping zones above us. I don't like to take positions in between. I stay as disciplined as I can. Wow, NQ looks very good. Very clear levels. I'm assuming QQQ will be the same. So again, if I was to draw zones, this would be my next zone here. But instead of that, I already know where the bottom is going to be. So I'll be playing this zone once we get in here. But while we're in between our zones, I do have this level. And that's how I do get these levels in between the zones. I do know this is an important level, was part of the top of a zone. So as you can see here, it was respected. Again, same thing here. If I was to draw the zone out, it'd be right there. So instead of that, I just draw the bottom of the zone. And I know that level here will get some reaction. So that is NQ. Very clear levels. So I do expect, like I was saying earlier in this live, same way we go up a level, up to zones, it's the same way we come down to zones. You can see the similar pattern here. Similar pattern here to here. Similar pattern here. It looks almost identical, right? And then we got that clutter here. We got that clutter here. We have this clutter right here. So that's how I'm able to stay out of certain areas when I've seen past price action be not so favorable for clear and clean action. I stay out of those zones, but the areas that have clean price action are areas I do like to tend to jump on the trend and take positions. And if we get down to this daily zone here, again, if I was to draw my zone, it'd be right here. So instead of drawing this zone, I just take the bottom of the zone, and that'll be a level to watch. Use that. Now we'll get into my last ticker I'll be going through is actually I'll be going through VIX. Just give it a quick look. See if there is a zone I can watch on the hourly. Yes, there is. Be paying attention to this level here. This is a zone. I should just draw this out as a zone. I'll look to see if participants want to sell off their hedges there. And we're in such a large demand. Again, these are levels I would be watching inside this zone. VIX is an expensive future contract, so definitely these points are a lot, so it might look like small numbers, but they're pretty significant. They go by 0.05s. That is what a tick is on VIX. So those are my levels on VIX. And QQQ. I think QQQ will probably have the same clean price action coming into this week. So on the weekly, pretty clean. This one went right to the top. All-time highs are right here, so see how significant this supply zone was. The next supply zone I had was all-time highs. Definitely be interesting to see. It's on the weekly. Let's go on the daily. I'm gonna go this a little quicker. Again, not a full, doesn't change the trend on the daily, but it is a smaller retracement area. So it's a weak daily demand zone, if a such thing, but it's probably an area where we might see some buyers try to jump back in for this ride. So I do mark it. But again, just like NQ, my stronger daily demand is lower. But we could see some participants try to start a position there. Again, this is my stronger daily demand. So starting with demand zone, and then pretty much our supply zone. Again, just like NQ, this is another zone for me, but instead of having that bottom and drawing it out, I just marked the top. See how that was respected. Same thing with this one. This one would be my zone, but I'm actually going to say the orders did move up here and get pushed down. You can see how like exactly like this one right here would have been a zone for me. And say we got towards the 23rd and then coming into that Friday, you can see how say the bottom of this zone was respected right here, right there, again there. So it is a level you want to have up there. So this would be my levels in between the zones. Somebody asked me how do I have my levels marked between my zones. They're not the more recent and the ones that are not broken. Those are the ones I classify as zones, but the old zones and those levels are what I use in between my zones to see areas of strength or weakness, support or resistance. And the same thing here. You know this is a zone. This one I might draw out. And if we do break a back below, I might be interested in playing some QQQ this week. Feels like the price action is moving a lot smoother. Especially if we're going to be getting this kind of price action down. If we do fall below here, I'm definitely interested in playing some QQQ. And that is my hourly zones for QQQ. You guys have any questions? Hope you guys enjoyed this prep video. I will have a more detailed game plan once futures and pre-market comes. If you're not in Team Bull, that's where I do post my playlist, what I like to see in the market. But other than that, I appreciate you guys for joining me in this prep video. Have my levels all marked out, ready for the week. You guys enjoyed. Appreciate you guys.